let's dive into a really critical choice that every single Forex brokerage has to face. It's this fundamental dilemma. Do you chase that fast, exciting, but ultimately fragile growth? Or do you play the long game and build real, lasting authority? Honestly, this one decision can be the difference between success and failure.
And this quote it nails the first part of the problem, right? So much of the industry is built on this marketing model that's basically a treadmill. You keep paying, you get traffic. The second you stop paying, poof, you're invisible. It's just a constant expensive cycle that doesn't build anything permanent.
And here's the other side of that exact same fragile coin, your infrastructure. It's not just about your marketing. If one single partner, one little technical link in your chain can grind your entire operation to a halt, well then your business is standing on some seriously shaky ground, no matter how much traffic you're buying. Now, here's the really interesting part. This fragility, it's almost always hidden. On the surface, a brokerage might look like it's crushing it. You see the ads everywhere, you hear about all the signups. But underneath it all, the actual structure is dangerously brittle.
And look, this isn't some rare one-in-a-million scenario. A huge number of brokerages are running their business this way. They're essentially building what looks like a solid house, but it's on a foundation made of glass. All it takes is one crack, one single point of failure, and the whole thing can start to come down.
So to really get our heads around this, let's picture two completely different paths a brokerage can take. First up, we've got the path of fragility. Let's meet our first character, who we'll call the fragile broker. This is the story of someone who's all in on short-term gains, often at the expense of any real long-term stability. And boom, here it is side by side. This really shows you the two different worlds we're talking about. On the left, the fragile broker is all about those quick wins, relying on single dependencies. But on the right, the resilient broker is playing a completely different game. It's all about diversification, building trust, and earning real authority. As you can see, their destinies couldn't be more different. So what does this fragile foundation actually look like in the real world? Well, it's things like depending on just one payment provider. It's only having one or two liquidity connections. It's a growth model that's almost entirely dependent on paid ads and flashy bonuses. And, this is a big one, having almost no media presence and zero institutional credibility to back you up when things go wrong. Okay, so you've built this brokerage on that fragile foundation. What happens when the system finally breaks? Because, and this is important, when you build something this fragile, it doesn't crumble in slow motion. The collapse is fast, and it is absolutely devastating. Just imagine this playing out. Day one, you get a double whammy. Your main payment processor cuts you off, and at the same time, you have to pause your ad spend. By day two, traders can't deposit, withdrawals are getting slow, and panic starts to spread like wildfire online. By day three, because you have no positive media out there, rumors and negativity completely take over the conversation. And by the end of the week, you're basically a ghost. The odds are off, your reputation is shot, and you're invisible. This is the question that kills a brokerage. The moment traders start asking this out loud on social media and in forums, the damage is already done. In a market that is built 100% on trust, a question like this is basically a death sentence, and it spreads faster than you can believe when there's no pre-existing credibility to fight it. But, okay, it doesn't have to be that way. There is another path. Let's talk about the alternative, the path of resilience. This isn't about trying to avoid problems altogether. That's impossible. This is about building a structure so strong that when problems do hit, they don't turn into catastrophes. And it's a very deliberate, very strategic choice. This whole strategy really comes down to four key pillars. First, you diversify your payment channels so no single point of failure can shut down your deposits. You do the same with your liquidity network. But then, and this is so important, you proactively build real media visibility and you invest in consistent long-term public relations. It's about a complete, holistic approach to stability. And that's the key takeaway here. Real, genuine stability isn't just about your servers staying online. It's about how the market perceives you. It's about having a credible, established voice in the industry. Stability is what happens when your technology, your reputation, and your public presence are all working together, all strong. And that brings us to the real game changer, the core difference between these two paths. The secret weapon that the resilient broker has, that the fragile broker almost always ignores, is the compounding advantage of public relations. So let's define that term, compounding authority. This is brand credibility that doesn't just appear when you pay for it and vanish when you stop. No, this builds on itself. It grows stronger and more visible over time, completely independent of your ad budget.
Think of it like this. Every article, every mention is another brick you're laying in your digital reputation infrastructure. It's an asset that actually grows in value. This chart just illustrates the idea perfectly. Look at the ad visibility. You get this huge, immediate spike, right? But it's temporary. It disappears. Now look at the PR visibility. It starts much smaller, sure, but look what happens over time. It grows, it compounds, and eventually it creates this powerful, permanent baseline of visibility that no short-term ad campaign could ever compete with. So what do you get from all this work? What does compounding authority actually build for you? Well, it gets you a permanent presence in search results. It builds a much stronger perception of your brand among investors and partners. It creates real, lasting credibility inside the industry. And maybe most important of all, it builds the one thing you absolutely cannot buy with ads: genuine, deep trader trust. So you see, it all boils down to a pretty fundamental choice. And this isn't just about picking a marketing tactic for next quarter. This is about deciding what kind of company you actually want to build, what kind of future you're building towards. And this is the question every single founder really needs to ask themselves. Are you building a business that's just living for the next ad campaign, the next bonus offer, the next month's traffic? Or are you building an institution, something that can withstand shocks, command respect, and be here for a decade or more? At the end of the day, the path to resilience is about moving beyond those short-term tactics and building a truly institutional profile. The key takeaway is this: don't just rent your visibility with ads every month. Own your authority by building a powerful, lasting reputation.